What's up everyone, welcome back to another video with the Millennial Finance. In September 2022, StashAway announced a new portfolio that they're launching in conjunction with BlackRock. I didn't actually know about this launch myself until I so happened to open the StashAway app and discovered it through there. This is pretty impressive because for those of you who don't know, BlackRock is globally the largest fund manager in the world with over $10 trillion in assets under management. No, I did not say that wrong. Yes, they do have $10 trillion in assets under management. They are so big that people even think and make YouTube videos about how they rule the world. This year, when the housing market in the US was red hot and prices were just skyrocketing, many people believe that BlackRock did in fact invest in a lot of these houses to shore up their property portfolio. But enough about that, because today's video is not just about BlackRock, but whether the new StashAway and BlackRock portfolio is worth our time to invest our money in. Let's find out. Cha-ching! Before we start, if you want to invest in StashAway and you haven't yet, use our link, we'll leave it down below and you'll get 50% off your management fees for the first 6 months. So, what portfolio is StashAway launching in conjunction with BlackRock? So StashAway has launched many new portfolios ever since their inception. Other than the general one, they also have an ESG one, a thematic one, and now they even allow us to customize our own portfolios where we can choose what ETFs we want in it. To be completely honest, not many of these new launches got me excited. The only one that I really tried was the thematic one because it seemed kind of interesting. When they mentioned the name BlackRock now though, it kind of pulls my attention towards them. I'm not exactly sure how involved BlackRock is in this portfolio itself, but I'm sure they wouldn't want other companies just using their name like that without being active in the decision making of this portfolio. The BlackRock portfolios are also called general investing because it's meant to be sort of a broad portfolio without any focus on any particular sectors or themes. In a way, it is a direct alternative to StashAway's own general investing portfolios, which they will keep alongside this new one. According to their website and what I've seen so far in the app itself, the BlackRock powered general investing portfolio is meant to be a bit more diverse with 15 to 25 different holdings at any given time. This is compared to StashAway's own general investing portfolio, which usually holds around 7 to 13 different ETFs. Just to clarify, having more diversification in your portfolio isn't necessarily good. It could lead to something investors like to call diworsify, which basically means that your portfolio is actually getting worse off due to too much diversification. So this comparison between the two portfolios, we shouldn't really just look at it and say, okay, because they have more ETFs, I'm going to go with the BlackRock one. There's still many other things that we need to consider, which we will do later in this video. But before we get there, what is in this BlackRock general investing portfolio? As usual, I'll be talking about it from the standpoint of the most aggressive portfolio option that they have out there because that's the only one that I've tried. In terms of high-level asset allocation, it's pretty well split with 57% of the portfolio in US equities, 42% in international equities, and the remaining 1% in cash. I like this because most of my other portfolios with my brokers, other robo-advisors and stuff like that is very heavily tilted towards the US. With so much political instability going on right now and the risk of something bad happening at any moment, having this extra exposure to multiple different regions is a nice thing to have. Looking at the detailed holdings of this portfolio, and immediately you'll notice that there's actually so many different ETFs that make this up, and it is very well diversified. On the international equity side, there is this standard exposure to stuff like Europe, Asia ex-Japan, China, and emerging markets. Now, these are in no way new ETFs. Many of us have already seen this either through robo-advisors or through investing on it ourselves. However, they also do have a few quite unique ETFs, I would say, that we don't usually see, like aging population, agriculture, price momentum, and small cap. On the US equity side, there is a lot more standard exposure with a huge chunk of the investment pie going towards the S&P 500 with an overall allocation of 18% in this portfolio. After going through the last 2 years, I don't really mind this. Yes, it is nothing special, but the S&P 500 is the bedrock of most investing portfolios long term. So I've went through the phase of picking and choosing these unique ETFs, but what I noticed is that in the long run, the performances would be roughly the same with a lot more effort. Overall, I really like this portfolio allocation, what they're investing in, and this is especially true on the international equity side. Looking at the portfolio performance when backtested, it does look pretty decent as well. When compared to the S&P 500, its return since 2017 seems to be nearly the same, but this portfolio does seem like it's a bit less risky. Maybe it's because of the diversification, but for example, in years that the market is down, this portfolio is down less, but in the years when the market really goes up, this market also goes up less. For example, year to date 2022, this portfolio is currently down 13.8% versus the S&P 500, which is down 22%. However, we must still keep in mind that these are backtests and it's no indication of how this portfolio will perform in the future. So now that we've talked about BlackRock's general investing portfolio with StashAway, how does this compare with StashAway's own general investing portfolio? As I said earlier, this BlackRock portfolio is meant to be more diversified. It also tends to trend along with the markets, meaning if the markets go up, it will also go up. If the markets go down, it will also go down. Whereas the StashAway general investing portfolio may deviate from the market at certain times. To be honest, even after a few years, I'm still not completely sold on StashAway's algorithmic investing and their ERAA model. The truth is, no one really knows outside of the people working in StashAway what the investing decisions are truly based on. While we may also not know what the BlackRock general investing portfolio is based on, we at least know that we have the largest fund manager who definitely wants to protect their reputation. One very important call out of the BlackRock portfolio is that looking through it, I had a feeling that they would only invest in ETFs that are powered by BlackRock. This can be seen by checking in the app, finding out the ETF's name, and if you see the name iShares, then you know that it is owned by BlackRock. For those of you who don't know, iShares is a collection of ETFs that is owned by BlackRock after being acquired in 2009. I didn't check every single ETF because that would take a bit of time, but I had a feeling that this was the case because, of course, if BlackRock is launching this portfolio StashAway, they would want to sell their own products. Compare this to the StashAway general investing portfolio, which can source their ETFs from any fund manager that they like. I'm not saying this is necessarily a bad thing, but there may be an element of bias in determining what ETFs make it into this portfolio. Having said all of that, I have personally moved all of my funds I had in the StashAway general investing portfolio into this new BlackRock one. I found out about it on the app, tried to create a portfolio, looked through all of the assets that they held, and decided to make the switch. It's not that the StashAway one was bad. I mean, yes, it was doing poorly, but so was the rest of the market. It's more of just, I was enticed to try out this new BlackRock portfolio. Also, I'm going to be putting more money into StashAway moving forward and continue on with my usual DCA plan. Hopefully, I can get more buys closer to the bottom. We can never truly time the market, but valuations are starting to look pretty good right now. Anyway, that's it for today's video. If you enjoyed it and learned something, give us a huge thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.